Dharamshi joins us now. Let's take our conversation forward. Ravi, good morning. Thank you for joining us. Ravi, the two big event risk, the Fed outlook for 2022 and budget, that's behind us. What's next? And how exactly, to your mind, budget will change the market positioning?
So, Nikunj, good morning to your viewers. I would say that budget is of continuity, and it has in fact reinforced all the trends that were continuing. There is no change that is happening. There is little bit further push being given to capex, more push being given to renewables. There is more push given to digitization. There is more push being given to capturing the China plus one opportunity. So those are the trends that are already in place even before this budget, and the budget has done well to reinforce those trends even further.
But Ravi, the fact that there is a strong onus on expenditure, which is capex, will the bent of the market start changing more decisively? Let's say from high growth sectors, startups, high consumer staple stocks, high PE stocks, will that decisive term start? Because now you know that which way earnings are headed and which way the scope of earning expansion is higher.
Right. No, absolutely. From a tactical and from a relative standpoint, the cyclicals are better positioned, better valued, and there can be better returns over there. But we don't look at it in absolute black and white terms. So there are some secular themes, and digitization, energy transition that is happening, and the China plus one. These are secular themes that are going to go on for another 10, 20, 30 years. And I don't think that trend is going to change. And then on the other hand, there is a cyclical trend which is happening, which is the recovery in real estate, recovery in capex cycle. And there is ancillaries along with that and financials that can aid into that recovery. So we have incrementally moved our portfolio positioning towards cyclicals in the last 6 months. Having said that, it is not like we are completely abandoning the digitization and all those kind of things. I think those companies are going to create far more wealth even from here over the next 3 to 5 years. So it's a bit more tactical in nature, the positioning, rather than saying that, these digitization and the new age stocks are done with, and there is no more wealth to be created over here.
Ravi, you've put a fantastic piece of presentation which talks about mega trends, which talks about how the revival in the capex and how things in a sense will change for the economy because of what is happening. So let's go through it. Let's talk about the mega trends, something which always fascinates our viewers, that what are the big themes and trends?
No, so 3 mega trends, as I mentioned earlier, is one is the world is digitizing. And what COVID has done is that it has accelerated this trend of digitization. And this is not true only for consumers, it is true for companies, it is true for government. And this trend is not changing anytime soon. If you can see what is the kind of numbers that Microsoft and Google are reporting, that tells you at the, in 2014, when Microsoft started its cloud services, it used to be a $500 million business. Today it is, I think, if I'm not mistaken, almost $65 billion kind of a business, and growing, still continuing to grow at strong 20-25%, even at this size and scale. So that just tells you the size of opportunity, the growth at which some of these companies are going. And if Microsoft, which is like the number 1 or 2 company in the world, is continuing to grow like this, then the India is still a small cap in the world, and Indian companies are also still very, very small. So that is number 1 trend, which is digitization. Number 2 trend that we are very bullish on is the China plus one, which is the supply chain manufacturing shifting away from China, where I believe India is giving itself a fair shot at grabbing a large part of that opportunity. Surely there are other countries in the fray as well, whether it is Vietnam, Bangladesh, all those countries will also take their pound of flesh, but no other country has such a large population which can come into the workforce, or the kind of power availability, or the kind of digitization, and the tremendous growth we have done on the infrastructure side as well. and we have this attitude of rolling out a red carpet, whether it is at central government level or at state government level also. So we are doing our best to capture this, and I think in the next 5, 7, 10 years, we are going to capture a large part of what China is going to cede in the global supply chain. And the third mega trend that we are talking about is the energy transition. The world over, everybody is moving away from fossil fuels and basically towards net zero emissions. This is not anymore a fad. It is not something that is good to do with your conscience or something, but in fact, it is become an imperative from business standpoint, from regulatory standpoint, from policy standpoint. Everybody, from fund management standpoint also, now it has become an imperative that you incorporate ESG into your framework. So when such confluence of forces are pushing this theme, it is unlikely that we are going to reverse. And it for the humanity also, it is very important that we move towards having better environmental, social, and governance norms. So yeah, these are the three mega trends that we foresee, and there are many plays that will be available within this mega theme in India as well.
Ravi, hi, morning. Good to speak with you as always. Nikunj and I were chatting with Vallabh Bhanshali just last night, and he said that, there's going to be disruption in possibly every sector. I mean, he quoted examples of Web3, of SaaS, of metaverse and everything, and he said it's going to be very hard for traditional economy. Ravi, can you hear me? Can you hear me, Ravi?
You there for a moment, but now I'm back.
Okay, we seem to have snapped that line with Ravi Dharamshi. Yeah. Okay, Ravi, I was just talking about and taking a leaf from our interaction with Vallabh Bhanshali last night, and he told Nikunj and me that the old economy sectors need to sit up and take notice in this fast changing environment of Web3, of metaverse and SaaS, and anything and everything which is not able to catch up with technology is going to have a hard time to survive. And he quoted examples of what happened with the auto industry, with the agriculture industry in the US economy. Do you believe the same could replicate itself, Ravi, here in India as well, wherein the traditional economy may not grow as sizable as the new age world?
No, so absolutely, change is the only constant, and things are going to change. And there are periods where there is slow change happening, and then there are periods where there is rapid change happening. We are in a period where the rapid changes are happening. Rapid changes are happening on the technology front, on the business model front, on the global markets front. So companies and businesses that adapt to those changes will come out winner. And if you are found you will end up with a boiling frog syndrome, essentially, if you don't notice the change that is happening around you. Gone are the days when you could sit on your laurels that I have so much market share and nobody is going to come and touch me. So just as an illustrative and example purpose, if I were to say the two-wheeler and the four-wheeler industry in India is at that cusp today. We in next 5 years are going to determine who is going to come out winner. For sure, there is a rapid change that is going to come about. Product adoption on the EV front, on the two-wheeler, E3-wheeler, and EV four-wheeler front is going to be very, very rapid. So, and markets respond to that incremental change. And this change is not a linear change. It happens in a S curve. And that S curve, we are just entering the rapid adoption S curve right now. So, two-wheelers and four-wheelers are an example of an industry that is about to witness fantastic change. And this is likely to replicate along other sectors also. So yes, you have to keep your eyes and ears open and adapt. The companies that are most adaptable, agile, flexible are the ones that will survive. And if you can survive, then you will thrive in the next cycle.
Sure. Ravi, the one space that you track very closely, and that's pharmaceuticals. So far, the disruption disruption has only been in a very small e-pharmacy delivery segment, so to speak. But can pure play pharma go or undergo disruption of any kind?
So pharma can be, the sub-segment within pharma are US generics, domestic pharma companies, the branded generics. Then there is companies that are focused on biotech. There are companies that are focused on APIs. This is the broad segmentation of how the Indian pharma industry is divided. Within that, I think US generics are facing the which is the largest piece also, is facing the biggest challenge. There is a need for them to upgrade themselves, move away from the opportunities that were there in the past, which is the oral solid, have kind of been saturated. So injectables is there, but it is probably a next 3-5 year opportunity. After that, even that will be saturated. Then will be inhalers, biotech, specialty molecules, complex generics, and finally new chemical entities. I think that is the that should be the goal of every Indian pharma company. Eventually, over a 10-year period, they should have become innovator from being generic companies, and I don't think there is a choice to that. So I think pharma industry is undergoing a transition where every company, depending on their stage, is trying to jump and leap to the next stage, because the opportunity in the last pool, which was the oral solid, has kind of deteriorated. Yeah, so that is broadly the US generics. On the domestic front, I believe it's the valuation and the growth. The disruption that has happened in the Indian industry is that nearly 25% of the Indian pharma market has become COVID market. Only the Dolo, vitamin C, Zincovit, and other COVID-related drugs are the ones that are selling. All other types of ailments, whether it is surgery and all those kind of things, have taken a backseat for the moment. I think there is a cyclical recovery that can happen in those therapy areas, and that can lead to some amount of revival. So in the domestic market. So you have to find a play which is kind of a balance between the US and domestic market, and which is positioned to take advantage of whether it is a cyclical domestic recovery or the new opportunities in the US market.
Good morning, Ravi. It's always great to have your views on pharmaceuticals, isn't it? I wanted to just shift gears and ask you something else and related to the budget. We've now have the government making it official. The LIC IPO is going to take place this financial year. The DIPAM secretary saying the DRHP could be filed as early as in 7 to 10 days. He's talking about how PSU stocks will continue to see buybacks, stock splits, higher dividends. IDBI EOI is coming out. The question I wanted to ask you is there a case for re-rating the PSU pack, or is one being looking at the disinvestment target going to be more conservative on the PSU stocks?
I agree with you over there. There is a case that can be made that the privatization can unleash huge amount of productivity. We have witnessed Air India. Air India was more something like a millstone around the government's neck, and finally they have gotten rid of it. But there are many operational efficiencies that can be brought about in some of these organizations. It purely because of the bureaucratic nature and the ownership of the government is what has been contributing to the deterioration in the financials. And a change of guard at that end can unleash a lot of productivity and improvement in the financials. So, but these businesses do have the technical capability, and if there is an opportunity out there which they can grab and position themselves for that, for sure there can be a large re-rating. I am not making the case for the entire PSU basket, but at the same time, with these targeted specific ones which can get privatized are the ones that can witness the large re-rating. And coming to the point, I think in the budget document, I think divestment, what they have factored in, seems to be on the conservative side. In the past, which is not a bad thing. I would rather be surprised positively than be surprised negatively. So I would want more privatization to happen, and definitely that can unleash a lot of efficiency and productivity gains in these PSU companies.
Further, Ravi, if you look at the ValueQuest trends and themes, you folks, for example, like large private banks. But after what has been announced in the union budget as far as capex goes, how would you play that in the market? The public sector banks, only the private sector banks, because the banks are going to have to play a pivotal role if the government's expenditure is going to go up 35%, and that should have, of course, a cascading impact on the private infrastructure companies too.
No, so we have traditionally had a very, very averse view to owning any companies where our and the promoters' interests are not aligned. So over here in the public sector, we believe that the interests were not aligned. Government had a different objective and a different agenda as compared to a minority shareholder who is looking for companies that will create value and wealth from a longer term point of view. Now, if there is going to be a change of hand and if the interests are going to get aligned, then we are definitely going to look at it with a positive view, and that is what will bring us towards owning some of these companies as well. So for the time being, we are still continuing to stick with our large private banks focus, but we are keeping a very active eye on some of these PSU, whether it is banks or non-bank companies that can, there can be a large gain over there. But we are okay to buy it a little bit more expensive, but after the clarity has emerged.
Okay, so let's see how all of this pans out. But it's always great talking to you, Ravi Dharamshi. Thanks so much, and for being so candid from the budget to the global uncertainty to how to even play pharmaceuticals. And you're, of course, one of the domain experts for that, right?